go ahead and get started. So I appreciate everybody for coming on a Friday morning. This is the San Diego Imperial Small Business Development Center's Connecting with Capital series. This is what we do to be able to kind of help folks get to know different lenders and understand a bit more about the Small Business Development Center process. Again, we're funded by the U.S. Small Business Administration and the California Governor's Office of Business and Economic Development. As Small Business Development Centers, we have little over 100 different part-time and full-time advisors throughout San Diego and Imperial counties. One of the main things we do is help people like you, the small business owner, the entrepreneur, be able to access capital and navigate. And part of that is, of course, working hand in hand with a number of different lenders. And so this is our series that we do on a monthly basis. And on the fourth Fridays, we talk to some alternative lenders, folks that aren't banks, that aren't community development finance institutions and nonprofit lenders. They have unique ways of looking at things and really are able to help a lot of business owners in a lot of different ways. And I think as we continue along with with the pandemic, I think looking at creative ways is all the more important. But what's good is these folks are lending and have options for you as the business owner. So we also want to thank in particular the sponsors for Connecting with Capital. We have a couple of them on here, both Marble Bridge Funding and Primary Funding. But we also want to thank Home Street Bank, Main Street Launch, and CDC Small Business Finance. So we'll go ahead and kind of go around and at least let each of the lenders introduce themselves, a little bit about just yourself and your organization. And then we'll continue along with the questions. So why don't we go ahead and start with you, Mr. Andrew?
All right, good morning, everyone. My name is Andrew Crone. I'm Senior Vice President at Marble Bridge Funding Group. We are a commercial finance company. We've been around 23 plus years, and I do the underwriting and also communications with small businesses. And we are a what you call receivable finance company, purchase order finance company. And I work with small businesses that are receivable based. So they provide a product or a service with another business.
And what about you, Mr. Reuben?
Good morning, everyone. My name is Reuben Goldstein. I work for a company called Bank of Cardiff. I've been there for about 13 years. We are a lender / broker that specializes in providing equipment loans and also working capital and lines of credit to small businesses that traditionally do not want to go through a very long SBA or local bank process.
Fantastic. What about you, Fernando?
Good morning, Fernando Ponce with Primary Funding. I myself was in banking for about 11 years, working for large commercial banks, Chase Bank primarily most of that time in the commercial real estate finance, C&I lending. So a lot of experience with how banks work and the types of loans that they do. Primary Funding has been in San Diego now for 25 years. We were originally a factoring company. Still our primary source of business is factoring, but we also do PO financing, lines of credit, bridge loans. And really we try to work with companies that are either on their way to becoming bankable or potentially maybe had a hiccup or with a bank at one point, slipped up and maybe got exited from the bank, and we help them to get back to bankability. But ultimately our goal is to work with a company, help them scale, and then eventually get them over to a bank. Thank you.
Perfect. And you, Pete?
It's Pete Deegan with LensSpark. We traditionally help small businesses with their equipment financing needs and working capital solutions, and pretty much kind of building on what Fernando said. Eventually we want to get you back in good standing with your bank, but ultimately sometimes time or other issues may be a factor where we can kind of help, and eventually we would like to get you back in good standing with your bank.
Fantastic. And then we also have on our panel today, Brianna Weisinger, she's part of our Small Business Development Center team. I'll let her introduce herself and what she does.
Morning, everybody. I'm Brianna Weisinger. Like Danny said, I'm the part of the SBDC network. I'm the director of the South San Diego Center, and I run the center in South San Diego that serves primarily National City, El Cajon, Imperial Beach, and the South Bay area. serving clients in all different business needs. So the SBDC network will support you in identifying lenders and getting your paperwork together in order to make a strong financial package that is approvable for lenders. We help you evaluate your business. We help with marketing and other aspects. I come from a small business background myself, so not only having worked with high-tech and life science startup companies, I am also a small business owner myself and have worked with many small businesses and nonprofits in the region in order to support the development and growth of companies in the region.
Fantastic. And then we'll come back to our lenders. You all talked about how, one of the main objectives is to, is help folks get back, more towards bankability and things like that. But, I think what's important is also to kind of, talk about the types of businesses you do work with and you don't work with. And also just, some basic things about how long they need to be in business, or is there a particular industry type that fits well with you? Why don't we go ahead and start with you this time, Pete?
Yeah, so as far as equipment is concerned, we really are what I like to call equipment agnostic. As long as it makes sense for your business, we're happy to get funding provided for you. We can work with startups, although it's a little bit more difficult. Ideally, 2+ years is something that's a little bit more manageable for us, time and business wise. Credit, we're an alternative lender, so we can be flexible. If you want to put a number on it, around 600 is going to be the minimum. When it comes to like a working capital solution, those typically are more cash flow based. So we're going to be looking at bank statements. Your time in business, could be as short as 6 months for one of those. But again, we're more so going to be looking at cash flow and analyzing that. So typically going to want at least 8 to 10K a month in deposits on a minimum per month.
Fantastic. What about you, Fernando?
Yeah, so historically, the best fit for us is going to be B2B industries with accounts receivable. So that's really where our bread and butter, we're going to be able to finance your receivables or leverage a contract that you have. We do a lot of government contractors. We are starting to carve out a niche as well for companies that do a lot more e-commerce. And maybe you sell through Shopify or Amazon, and we can have access to that portal and help you finance some inventory that way. And then we recently were accepted as part of the Cal Southern Guarantee Program. So that's a big plus for us. That helps us really on the inventory side, because we can get guarantees on loans that potentially had no collateral, or really have no collateral, but because of the Cal Southern Guarantee Program, we're able to get a guarantee from the state and help you to access finance that inventory that you need.
Perfect. What about you, Reuben?
So we provide 2 products. We do asset-based loans, equipment, vehicles, things of that nature. We also do lines of credit and cash. Currently, for equipment loans, we are funding all businesses, including startups. For our cash product, we don't do startups. You got to be in business at least a few months. I think the only deals that we don't like to take a look at are deals that are, I would call, microtransactions. So we prefer most businesses to have at least 10K a month in deposits and have a need of at least 10K or more.
And coming back around to you, Andrew.
All right, we are working with businesses that are receivable based, that need receivable or purchase order finance. We work with startups and work with even some pre-revenue companies that are just getting set up. They set up with us and then they turn into revenue companies in a few months. Examples are engineers, architects, contractors, subcontractors, staffing companies, importers, exporters, doing business with other businesses, small or large, state, government, federal receivables. We fund all those, and even some on the international side. Anything that's B2B and B2G, as we say, business to government. And startups, like I say, there are a lot of small businesses that are starting in this environment right now, people going out on their own, and we are seeing a number of those coming in, and we are setting them up as well for receivable finance.
Perfect. And then coming to you, Brianna, kind of be able to explain a little bit about how SBDC advisors help business owners, navigate some of these processes and work with lenders.
Absolutely. So one of the things I like to say is that being a business owner, you're not required to be an expert in everything. You just physically can't be an expert in everything. However, you need to know the people that you can lean on in order to get the expertise you need to make decisions. And that's what our SBDC advisors do. In this particular space, we have financial advisors with long careers coming out of the private industry, where they have built careers in lending and financial expertise. So our companies work with us to develop their financial package, is what I would call it, and determine whether or not lending or finance capital is going to be appropriate for them, or if there are other ways that they can get business done the way that they want to. So the goal in working with your SBDC advisor is to help make those financial decisions. And then if you do decide to go after finance capital, your SBDC advisors will support you by helping you identify and put together that financial package that you will give to the lenders. The other thing that they're very good at is keeping their thumb on the pulse of the lending environment and understanding which lenders are, one, currently lending to your kinds of businesses and which would be most appropriate given the state of your individual business. So, we have some of the alternative lenders here right now. And if your business is not ready for bank lending because of a variety of different reasons, maybe if you don't have, outstanding credit, or you don't have the revenue that banks want, the SBDC advisors know to direct you to these alternative lenders. The difference between going on your own and working with an advisor is, oftentimes we don't know what we don't know. So if you're joining this call for the first time, you're probably surprised to hear about all of these different alternative finance options, because most people typically know about their bank, and you might know about investors and may not know where to find investors. But your SBDC advisors, because it's a network base, not only do we have the resources and the knowledge, but we also know where to find and dig for more resources and knowledge as well. So if you're looking for a certain kind of investor, your advisors can help with identifying that. If you're looking for certain kind of lenders, your advisors can help with identifying them.
Thank you. Yeah, so that's really what we're here to do, is to be able to assist and kind of navigate some of that particular process. And that was well explained. And so I want to kind of continue here a little bit more on the nuts and bolts here at the beginning, and then we'll kind of get into some kind of bigger picture questions. So along with the nuts and bolts, kind of what is the process for applying for a loan, your an underwriting process, if you what that is and what you have, and kind of what the repayment process looks like for a borrower from you. Why don't we start with you, Reuben?
Repayment terms, correct? How the process works?
Just kind of from application to underwriting, approval, and repayment, kind of the nuts and bolts of being a lender, being a borrower.
So I think the thing that Cardiff is known for, and myself as well, is we're fast. Most clients that apply with me, what is my application package? It's a one-page application. You can do it over the phone. I can text it to you. I get a few bank statements. I don't hassle you for tax returns or financials. Generally, for most requests below $250,000, I'll have an answer for you within a few hours, and I can actually generate a pre-approval within a few minutes. There are a lot of clients that need same-day funding, we actually get that done. I would say our average process start to finish is 48 hours, but we do a lot same day. Repayment terms, we're probably more flexible than we've ever been. We used to go up to 5 years. We're now going up to 6 years on equipment loans. And for many clients that have sought out what's called a merchant cash advance or a short-term business loan, we've got programs as long as 24 months right now. And I'd say half of our volume right now is due to lines of credit, which are very flexible. You can borrow and pay back as you see fit.
Perfect. What about you, Andrew? Kind of the nuts and bolts of Marble Bridge.
Yeah, basically, if everything is set up properly between me and the client, the time of getting an application, the funding could be, and signing could be in 5 days. So we are extremely quick. The longer explanation is usually when I meet with a client, we spend probably an hour to 2 hours going over their business and what we do. And I really go out of my way to make sure they understand all aspects of how the funding works. We have no minimum requirements. So when somebody is approved and written up and brought in, they're not required to file funding, they're not required to fund, and they could fund up to $5 million a month. So we don't put a credit limit on anybody. Generally, when somebody wants to go forward with us, we want to go forward with them. We will gather an application, usually a small application fee, and then we will start the process. The application will be asking for financials, tax returns, and usual documentation you might turn into a bank, but we're not looking for CPA audited financials. We understand a lot of businesses don't have those. So in developing the relationship, we're able to walk through, figure things out, and both parties usually are very happy to get together and move forward. And that's it.
Perfect. And what about you, Pete, from kind of the application to underwriting to repayment?
Yeah, so the application, fairly simple and similar to the rest of these guys, just one-page app. We can text it, email, e-sign, and some bank statements is typically all that's needed on like a 250K or under. As far as underwriting time, usually 24 hours we can get you an answer or approval on the table, usually same day. And it's about a 1 to 3 day funding process, depending on whether you're doing a cash loan, equipment, if it's titled or not, but moves fairly quickly compared to some other sources of funding. And as far as the repayment schedule on equipment for used, we're about 5 years on our max, 6 years on new equipment. What's really popular as far as the working capital side of things is our 30 to 90 kind of repayment schedule. So really quick loans for somebody that needs cash now, maybe has a bank option, but has taken a little bit too long and really needs just 30 to 60, 90 days maybe of some cash. But those do go out to 18 months if need be.
Perfect. And what about you, Fernando?
Yeah, so our process is definitely faster than a bank. Not quite. We don't do any next day funding or even 48 hours. Our typical time frame is going to be around 2 weeks. The items that we collect, it's pretty basic. I mean, it's typically AR, AP aging, a copy of a sample invoice, a corresponding PO for that particular invoice, and then we like to get the most current P&L and balance sheet just to look at to see just get an overall picture of where the company's at now. As far as the repayment terms, it really depends on the product. If we're doing PO financing, then that's typically going to transition into factoring, which so we'll finance the PO. Once it becomes an invoice, we'll advance more on the invoice, and then we essentially get paid when that invoice gets paid. So you don't have to worry about, hey, am I going to be able to make this payment? Am I going to, how is this going to affect my cash flow? We're working within the confines of your cash flow. So it's really beneficial to companies that are scaling quickly or that maybe, don't have a lot of cash on hand that need help with executing contracts. On the other side of it, on the e-commerce side, it's really the repayment term is really based on sales, right? So we take a percentage typically of the sales that come through your platform, whether it's Shopify or Amazon or whatever that may be. We'll have access to your portal there and take a look, and so we figure out a percentage that makes sense so that we're not hindering your cash flow, and then also we're getting repaid in a appropriate amount of time.
Great. So Brianna, coming to you, because obviously with SBDC, like you were talking about, the ways in which we help at the SBDC. So each of the lenders here are talking about some simple application processes, but they're also talking a lot about different types of financial reports and records. So what are some of the critical financial reports that someone should have, and what do they really look like? Like Fernando was talking about accounts payable, accounts receivable, and such. What are some of those, and how do we help people kind of understand those?
So the SBDC advisors will help you really navigate this entire process. If you're looking at a particular lender, they can help you put together the package that the lender is requiring. The critical statements, that you're going to be looking at are your profit and loss and your balance sheet and your cash flow statements, because the lender is looking to make sure that you have eventually enough money coming in order to pay the debt that you're going to incur. And how they do that is look at these financial documents. there are experts and accountants and CFOs who put these documentations together for businesses who are willing to pay for that or have the financial resources to pay for that. But our advisors can support you and direct you in how to use systems and create these documents on your own as well. The big thing that, I've heard a few words dropped here and there is cash flow. And if you don't understand cash flow, it's worth the, 15 minutes time of investment and a quick Google to really have an understanding of what they mean by cash flow. And really, we're talking about a specific kind of cash flow, which is your operational cash flow, which is the money coming into your business that's actually free and clear. It's different than your profit because your profit can easily be hidden in accounts receivable or in invoices that haven't been paid. So it's possible to have a very very profitable business without any actual cash that you can use to cover expenses because cash is just continually being rolled forward. So I definitely take a moment to really understand, what is the cash flow of your business, and because the business lenders are going to be looking at that when they're calculating what is called, the debt service coverage ratio. And this is basically their way of analyzing, and I'm not going to go into the details, because there's a mathematical calculation, but it's their way of analyzing, do you have available cash coming in on a regular basis so you can service your debt obligations, both the ones that you have currently and the ones that you're trying to get from the lender. And these are the calculations that they're going to be using to make their decisions. We also heard them saying that, they're looking at, your bank statements and things like that. It's because they want to make sure that you can cover and service the debt that you're going to be incurring.
Fantastic. Thanks, Brianna, because there's so many different things to think about. I think, when when you talked about how, a business owner can't be an expert in everything. And, that's really what we're here to be able to do, is to kind of help you, kind of navigate around, understand these things and make sure that you're basically prepared. Because, as we've gone through, in particular the last, 7+ months in dealing with COVID, I think, that's been a critical element is people, recognizing the need to have, adequate to good financial reports and records that are at their fingertips, not necessarily, something that's difficult to obtain where you have to call your bookkeeper or accountant, but it's something that you as the business owner can get and understand the basics of it. So that way you can communicate to a lender or a funder or anybody, really with that. And so with that, I kind of want to transition a little bit. I mean, certainly here we are, we're well into month 7 of the pandemic and the massive impact that it's had on, on industry sectors, some very, very severe and continue to be severe, like in our tourism and events-based business, and then obviously our service-based and restaurant business. And but then there's also some businesses that are doing just fine. And so I kind of want to, hear from you all kind of how you're seeing today and the look forward with COVID. I mean, obviously we have no clue what it's going to look like when more businesses are going to be able to reopen, but what you're seeing with today and to go forward with some of the lending marketplace and, and what you're hearing from clients and what you're doing. So why don't we start with you, Pete?
Yeah, I'd have to say overall, it's a lot better of an environment as far as underwriting and the kind of, I guess, conservative nature that we had maybe 2-3 months ago. You could feel it. There's deals that are getting approved now that maybe a couple months ago weren't. There's some industries that were, I'm going to say, restricted or considered high risk that we're starting to approve. I think last time I touched on food truck approval we were able to get, which is the first in a while. We're actually doing another one. Well, it's a trailer, excuse me, but still, there's some industries that have been heavily impacted, and we're kind of seeing the light at the other end of the tunnel here, per se. And it definitely is loosening up a little bit.
Perfect. And what about you, Fernando?
Yeah, I agree with, to echo what Pete just said, it's definitely improved from what it was before. I think there's a little bit more comfort as to, kind of what business is going to look like over the next few months, but it is still very up in the air, though. I mean, by no means is anybody, just feel like, hey, we know exactly what's going to happen next month, much less 6 months from now. So I think it's going to continue to be this way, probably for the next few months at least. We as a as a lender are definitely more cautious when we underwrite. We really look at every side of the deal now and make sure that, where before we were already taking on higher risk deals, and we really looked at things with kind of went through things with a fine tooth comb. Now we're looking at all aspects all around. Where are the issues that could come in? So it's definitely important as a business owner to be able to answer those questions. One of the things my underwriters like is when we're having a conversation with a business owner and they have questions and the business owner knows the answers, right? I mean, these are things that, when they ask, specifically, if there is an issue with cash flow, right, or revenue dropped for a certain amount of time, the answer should never just be like, well, it was just bad and we think it's going to be better now. But, well, it was bad. Obviously, a lot of things happened that led to that, right? We were shut down as a country for a while, but what have you done now so that going forward, if that happens again in a few months, what steps have you taken so that you're going to be able to continue to generate revenue as opposed to just shut down completely? And so those are questions that you want to really put some thought into. Go through, your financials with somebody at the SBDC that's going to help you understand that. They can actually ask you those questions ahead of time, and you put some thought into them so that you're prepared when you actually do talk to a lender and they have these questions. You actually have some answers that make sense, and it makes a lender feel more comfortable, because that's really what we want. We want to make sure the operator knows what they're doing, and we have confidence in the operator, not just the financials, and hopefully they do all right going forward.
And what about you, Reuben? I know you've done quite a bit around this, and I think you're going to be able to even kind of weave in an answer to someone's question in the chat here, in terms of kind of the how you're handling things now and a little bit of the look forward.
Yeah. And I think it was Leo that asked this, and Jeff Nash. So to me, it's a two-part question. How does a customer decide to continue to run and even expand their business during this climate? And how does a lender lend to a business if they're looking at historical performance and there's this big 6-7 months of no operations? It's a really interesting question, right? I think also on the lender side, how does a lender keep lending when we just funded a client, we just refinanced them. They literally, the day after they got their money, their entire staff got COVID. So that was can't make any payments. That's fun. So I guess the question is, you've got to put on, at least for me, I got to put on my thinking hat and talk to people and ask them what's going on, ask them why they're looking for money, think outside the box, and explore a lot of different programs. I would say right now we're adjusting everything. We have a manual underwrite, which is not just pressing a button and going beep, boop, beep, boop, boop. Here's your approval. Here's your decline. You got to figure out what's going on with this business, why they need money, for whether they need it today to make payroll or there's an expansion, what the projections are, what the general idea is, and that's helping us. I'll give a really recent example, okay? There's a customer that I'm funding. They're not in California. They're in Georgia, and they're getting a manufacturing piece of equipment. Their credit's not good. Well, why could we approve someone that has bad credit for a loan? Well, they're replacing a lot of their subcontracting costs. So if you actually look at it from like a normal lender, hey, this guy has a 580 credit score, but this is at a decline. Oh, okay, this guy actually, he's paying $6,000 a month to get this equipment, but he's going to reduce his bill to $2,000. So the way that I answer these questions is, there is no magic button, but there's a way to talk to people and understand really quickly what's going on. I would say from my cash flow based program, I'm not going to give cash to business that's been shut down and just restarting. I want to at least see 1 to 2 months of the business starting to be going back on before we lend that money. But we do understand it. I think if you're in the lending business and you can't understand that, well, then you've got a cold winter coming. So we've adjusted to that situation. Hopefully that answers it. But if anyone else has any more specific questions, feel free to shoot me an email, give me a call. I'm here to help.
Fantastic. And Andrew, what about you? Kind of the lending market as of today, and kind of the look forward in light of COVID.
All right. Well, from the traditional bank and we just had a new bank from the East Coast, the top 10, move into Northern California. And they reached out to me to partner up and just discuss what's going on. And so in asking them about their underwriting and how they're handling COVID, it was interesting. They said they're not going to fund anybody in the hospitality industry. So they've banned certain industries that they're not going to even touch. They talked about contractors. They're not really interested in that industry, something we do fund, but they are interested in more solid types of companies, and they are doing loans. But COVID, as far as talking to a network, and we know a couple thousand bankers, COVID is part of their process now. I don't know if they're using it as a screening tool, as an excuse not to lend, but they call it COVID lending. And they're talking about, when they talk to new clients who want funding, they're asking them, and some of the panelists have said this, how are you going to handle that? How's your business adjust for it? From Marble Bridge's point of view, when COVID began to where we are now, it's been totally changed. So there was 2 or 3 months of a lot of quietness, because a lot of referrals we get come from traditional bankers, and they were all in their house and they were adjusting, and as well everybody was doing PPP. That sort of is past now, and I'm noticing the bankers are back. They're out there. They're still in their houses, but they are communicating now, and they are talking about lending or not lending, and they are passing on a lot of deals. So we are seeing a huge raise now of business coming our way because they simply can't do it. And so from an underwriting point of view, we haven't changed at all. In fact, if you talk to me, I'm the guy who's underwriting. So in our phone call, we can get a lot done in a very short period of time to determine whether this is a fit for you or this is not. And so what we think is coming down the pike is people are making the adjustment. We all can't just hide our heads in the sand forever. We have to live our lives. We have to go out. COVID's a reality. It's going to be with us for who knows how many years. Hopefully they get a vaccine, things get better, and slowly but surely business gets back to normal. We all can hug each other again. But at this particular point in time, as far as Marble Bridge is concerned, we see it as an opportunity for entrepreneurs, people who are breaking away from their companies or have been laid off or what have you. They're starting new businesses. They have to go out on their own. And we know over the next 6 to 9 months, there's going to be a huge demand for lending. It's not going to be filled by the banks. It'll be filled by the people that are on this panel as far as the funding goes.
Thank you, Andrew. And Brianna, coming to you in terms of from SBDC, I mean, you've talked a little bit about, I think Reuben talked on how people are, increasing their cash flow or have adapted in different ways. And I think some of the others have as well. What are some of the things that you're doing and we're doing at SBDC to help folks, get their business going again and do things differently?
So SBDC over the last 6-7 months has worked really hard to support small businesses who are going through this, all the impacts of COVID. I think some of the biggest things that we're doing is we are available. We have, we obviously have financial experts that can help direct you towards lending and get prepared for that. But we have other experts that can help you look at your business from a strategic perspective. How can you improve what you're doing? How can you pivot on the dime that you're being required to pivot on? How do you change your marketing and outreach or your business operations? How do you understand the current legal environment around what you're allowed to do and not allowed to do? When are you allowed to put for restaurants? When are you allowed to put, your chairs out on the streets? And what day of the week, when the tides change, are you no longer allowed to serve those clients? And that's what our advisors are here to do. But not only one-on-one advising, which, obviously there's a limited amount of resources. Right now, if you want an appointment, we have appointments available. But if every business in San Diego flooded the SBDC, that would be a different scenario. We'll also provide a lot of training and educational opportunities. If you go to our website, you'll see on-demand trainings that are available on a variety of different topics, a lot of which have to do with pivoting your business in the COVID environment for specific industries. So for retail, for restaurants, for office buildings, so on and so forth, understanding what the new regulations are. If you need to all of a sudden, go online because you're a small business that has never had an online presence, and without having an online presence, you can no longer do business, we have trainings and opportunities and advisors to support you in how you get online and how you start to build your outreach and your marketing capacity aside from, the walk-bys that you would get in your normal business operations. So really our mission, we don't have a vested interest in you being funded by a particular lender or anything like that, because we're not, although we have good contacts, we're not directly affiliated with anybody. Our mission really is to support your business growth and support you in making your business decisions and support you in, surviving the current environment and thriving in the current environment. And we have had a lot of companies that really are actually thriving in the current environment, which is good to see.
Fantastic. And so I kind of want to continue along a little bit of these lines, but also, some of the combination of the opportunities that exist out there. I think we have someone in here who's looking at becoming a franchisee, and there's different models, but I think there's a lot of opportunities that may still exist. And I think, you've all kind of touched on that. And so kind of my next question is what opportunities are you seeing, and or, what's a deal, or what are deals that have really got you excited lately, that's been coming across, across your computer, as it were? Why don't we start with you, Fernando?
Yeah, the big one for us right now that we're very excited about is anything in government contracts. Those are just, there's so much opportunity. I mean, the government is spending so much money, and there's just you do have to be careful, because there is a lot of stuff that's not going to be sustainable, particularly like PPE, right? I mean, to give you a little horror story, we had a client we were working with that was trying to have us finance a huge $5 million PO with Costco for hand sanitizer. We ended up not doing the deal. They got financing somewhere else. Well, they spent $2.5 million just to produce all this stuff, and at the last minute, Costco pulled the PO. So they're stuck with, $2.5 million worth of their costs just sitting there, and now they have to go and try to liquidate this stuff for pennies on the dollar to try to recover whatever they can. So PPE is just a big one, example of something that was in huge demand, and now the market's being flooded with it. And there were a lot of companies that were able to capitalize on that and made a ton of money in that 6-7 month period. And now it's that opportunity is really condensed, right? And there's a few select companies that are good at it and that are starting to churn out product on a consistent basis. So government's great. We really like government, and anything with government contracts we're big fans of. So that's a huge one for us. Just again, be careful, do your research, make sure that you're familiar with the industry before you just go diving into it. And again, work with an advisor, because they can help you with a lot of that. Like through PTAC, I mean, they have access to the industry and know exactly what's going on and where you should go with that.
Fantastic. What about you, Pete? What are some of the opportunities you're seeing, or deals that have excited you lately?
Yeah, kind of what everyone's kind of touched on as far as talking and really understanding why we're doing a certain type of transaction and getting to know the ins and outs of the deal and the customer. For instance, I think I said this last time, but we had a food truck customer of ours, very high risk industry right now. And I got a contract from him on where he was going to park it, and we ran over how much their rent was going to cost and how much labor was going to, and it all made sense to us on paper, even though most lenders would just say, thin credit, high risk industry, we're going to pass on this one. I don't like it. It's too much for us. But we just really had a conversation. I said, why are you getting this? And, we laid it all out for underwriting, and it was a success. And I guess another good kind of opportunity or success story that I touched on briefly, the 30 to 90 day type of lending where a customer might have something in the works with their bank, but I mean, we all operate in the here and now, and sometimes like, hey, I just need 50 or 100K. I have this loan coming from my bank. They're a bank, and it's going to take 3 months, or it's going to be another 30 days. I got payroll, I got XYZ coming up, And yeah, I mean, we're really flexible in getting something on the board quick. We understand, hey, this is the plan to get out. So we're really going to underwrite this aggressively, cheap, pay it off really quick. And it's kind of a win-win-win for everybody because we get paid back, which is ultimately what we're looking for as a lender in the end is we just want our money back. And the customer was able to get what they needed in that expedited amount of time. And then the bank came in with a more traditional solution for them. So everybody won.
Fantastic. That's really good. And what about you, Andrew? I mean, what are, you touched a little bit on aspects of this on what, and talking to that lender, but, what are some of those opportunities you're seeing or deals that are exciting you right now? Oh, you're on mute. You're on mute there, Andrew. There we go.
You're going to love this. It all has to do with PPE. So yesterday we funded a startup company that's working with a city in Northern California. Second order, first one was like 30,000. Yesterday was 300,000 for N95 masks, and we funded this person. And they're a very, very young business. But they had a strong guarantor behind them, a family member, and we went for it. So that was the only order they had on the book. So that just shows you that we take a lot of different risks with our clients. We just approved a company doing testing for COVID, and they were growing like weeds, doing a lot of different stuff for commercial contracts such as Apple and Disney. And they have about 3 or 4 million in receivables, and now we're funding that for it because they're growing so fast. They can't get bank financing. They're sort of a mini VC funded type of company and angel funded. So we just got that one on the books. When I get off this call, my next call is for the city of New Jersey. So I have a client on the East Coast, and they've already done $1.5 million in gloves and masks for the city. And they have another $1.5 million, and they want to expand. They found a US manufacturer, so that's even better than getting it from China. And a lot of the states and the cities want to get it US made. And so we're looking at getting that deal done right now. And the one that I'm working on, we just are bringing in right now, when I talk about startups, is an Apple engineer who managed to get a $250,000 SBA loan from a CDC and no revenue. It's been 1.5 years now, but he's very strong personally, being an Apple engineer, and he's developed a product. You guys will love this. You come home, you put your keys, your wallet, your phone underneath a UV light, and it kills COVID. And we all know how those phones are. So all of our phones are worse than, they say a bathroom toilet. So he thinks he's going to get orders from every major retailer in the country. He is now reaching out to everybody and presenting the products. And he's looking for PO and AR finance, and we're going to bring him in and do that deal. And he has tremendous margins, and he has no competition. So that's an interesting deal for everybody listening, because he already has a loan from, so to speak, the SBA. And we could still fund that with him because we can work with those CDC lenders to get subordination, so we can come in and fund the millions where the guy is now ready to go. So that's a good example of getting money from more than one organization. And the SBDC in San Diego can help you get that done.
Thank you, Andrew. And what about you, Reuben? I know you've had all sorts of interesting deals, and you're seeing all sorts of opportunities that are out there. So what are some of those things that are exciting you, or stuff that you're seeing out there?
I would say that we actually are doing a tremendous amount of food service, even though that sounds kind of nuts. We're funding a guy not necessarily funding, but there's a guy that got referred to us. He's starting up a ice cream store in San Diego. He's spoken to everyone, and the answer is, yep, it's great that you have an SBA loan, and it's great that you got, good credit, but you're a startup. We're funding him. Or we should be funding him, I should say. I would say in terms of what's interesting to me is the client who's deciding to kind of step off the ledge and not know if there's ground beneath him. So I have a lot of clients who have been kind of saying, hey, I run a good business. I pay for my house. I pay for my car, provide a decent lifestyle for my family, but this is what I want to do. And they're more conservative. And now a lot of those clients are expanding because they're seeing an opportunity. I think that's the one thing I'd focus on, that right now COVID presents for many business owners who are willing to take the risk a tremendous amount of opportunity. You know, if you're a manufacturing company, you might be able to go get a lease for 6 months with no payments. It's not like these commercial landlords are doing great. If you're a restaurant and you think that COVID will break, I mean, this is what happened in 2008. You might be able to get a landlord to give you 50 grand of tenant improvements. You might be able to go into a hot neighborhood, you know, a Hillcrest, a North Park, a Little Italy, and really expand. If you are a service-based company, you might be able to hire a star salespeople or take a sales team from someone else. And then we come in with the funding. So I think those are the deals that really interest me, are people that are saying, look, I know this is going to be bad, and I think it's going to get worse for November. There's a lot of COVID cases throughout the Midwest. If everyone's paying attention, we got 75,000 yesterday. We can't go around that. But I think for many business owners, they're looking at this as an opportunity. What also really interests me is that clients that I'm working with are trying to do long-term financing because they are trying to hedge against inflation. So that's the other thing that interests me. I have a lot of clients who are saying, look, Reuben, give me the longest term deal, because I see all this money printing and I want to get something fixed because I don't want anything variable. And so that's one thing to go over. All of our rates are fixed. Nothing we do is variable. So I have a lot of clients that are saying, like, look, I can pay this off in 1 year, but I'm going to take a 6-year deal here because I am expecting that in the next year or two, prices are going to go up, rates are going to go up. And I think that's what's interesting to me, someone who is really thinking outside the box. And that's what interests me.
Cool. And Brianna, I'd love to hear kind of a success case that, you know, someone from your team or, you know, our SBDC team has done in terms of some of their COVID recovery and something interesting you've definitely heard about.
Absolutely. So I'm gonna keep it confined to the parameters of like lending in general when it comes to, you know, this particular environment, because I want to talk about how SBDC really supports you know, finding the funding that you need, or sometimes finding out that you don't need funding, both of which are the case. One of the companies that my team has supported over the last year or so is a company that's founded by a veteran. And you know, when he came into the SBDC, he came in looking for money. You know, most founders say when they're starting a company, we need money. And that is exactly what he was looking for. He was looking for someone to help identify the correct lender for him. And really what the advisors did was take a step back and look at his personal profiles altogether and say, look, you know, you have a great concept, you have absolutely wonderful business potential, but your credit score is kind of crappy right now. And if you go after funding at this particular moment in time, one of two things will happen. Your rate will be high, or you will end up not getting funded at all. So our advisors actually spent about 6 months working with him on improving his credit before putting together that loan package and going after financing in order to start his company. It took 6 months to get the credit score up where it needed to be, but after that, we were able to complete that loan package, and he launched his new business. So I consider that a success because we're not just looking at what you're asking for, we're looking at the realities of the environment that you're operating in and helping you as a business owner make the best possible decisions. And then we also have another company that we worked with that, or actually ended up not starting, that I still consider a success. Because again, our goal here is not to get you money. It's to get you, you know, strategic decision making, make the best decisions you possibly can, and do the best for the company and for you as an individual business owner. And sometimes it takes, you know, there's a reason people have mentors, and our advisors are like mentors in many ways. So this next company that I'm talking about, you know, he was really interested, or actually she was really interested in coming in. They wanted to launch their business. And again, what they need is money. Money is always the bottom line. But after, you know, spending several hours working with the advisor and going over and putting together, you know, the potential package and talking about what the strategy would be and, you know, what the actual business would be, ultimately the founder decided they weren't really interested in that industry and passionate enough about it for it to make for them to actually be happy operating a business in that industry for the long term. And when you're going into starting a new company, you really, it's going to take your heart and your soul to make it successful. And so you really need to be passionate about what you're doing. So ultimately, this particular person decided not to go after funding and not to launch the business. And I consider that a success because had they not really worked through the process and talked through everything with one of our advisors, they absolutely would have gotten funded. It was a great business model. It was, they had good credit. They met all of the parameters of all the lenders here on our panel. They absolutely would have gotten funded. But the likelihood that their company would have failed in the first 2 years is high because they just didn't care enough about that industry. And I can personally say that that is an absolute truth. I have started personally a company that I did not care enough about the industry, and I didn't take anyone else's money, so it was a waste of my own money, but I did shut down within the first 2 years because I really just didn't care enough about the industry. And so helping people make those kinds of decisions is important to us.
Thank you. That was a fantastic example, and I really appreciate that. So as we start concluding here, I want to kind of go around and kind of give, if everyone can give 1 or 2 tips, and that could be a tip of what to do or a tip not to do. As we kind of wrap up our hour here, why don't we go ahead and start with you, Pete?
Yeah, one that's I pretty much say it every time, but get your online profile straight. What I mean by that is if you have old addresses on one website, if you have an old location, if you have wrong phone numbers, lenders, it's for people too. It's one of the first things we do is we Google your company. We make sure everything's as it should be, and more often than not, it's another phone call. Hey, which one's your real address? Or hey, I have 3 phone numbers here. Or hey, who's this person? Are they an owner? Is this related? So those are just really easy things. It takes you 15, 20 minutes to just go clean yourself up before you apply. And then just, I'm sure everyone will say it, but just transparency. If, we're all alternative lenders, we all expect a little, hair on the deal, if you would. So just tell us the situation and we'll try and get creative to work around it. And, if that's leveraging different assets you have, if that's, getting really creative with maybe, a loan and then a plan for a refinance in the future, we'll figure it out. But we just don't want to have any surprises at the end and then just kind of end up getting egg on our face. But yeah. And
Perfect.
thanks to SBDC for having us too. I wanted to just say that as well.
Absolutely. We enjoy having you on, Pete. And Andrew, what about you?
Well, first and foremost, SBDC. And I could say that again, SBDC. Free services, 100 consultants. I mean, any small business that's on this call today, why wouldn't you take advantage of that? If you need marketing, you need finance, you need a business plan, you need anything. I mean, there's nothing like it anywhere in the state of California, what this organization can do. The fact that they put us all together here today is you won't find that anywhere. You won't see a bank doing that. I mean, this is really an amazing organization. As far as other secrets, don't hide anything. So when you are talking to us and are asking questions at the business, and there are things in the past, anything that comes to mind, if somebody says, any past bankruptcy, any tax liens, any judgments, anything I need to know, anything going on at all, share with us. We aren't a bank. We understand these things. We hear this every day with the clients we're dealing with. And we're going to give you honest, straight answers and give you the best advice we possibly can. So always be honest with your lenders. And then also, obviously, when you're working with the SBDC, so they could do their job and help you get what you need.
What about you, Reuben?
Yeah, I kind of want to piggyback off what people have said. Andrew, thanks to Dan, SBDC, for doing this. It's actually an amazing service. Also regarding like honesty, transparency, I guess the way to think of myself, I can't speak for someone else, is think if you're selling a house or buying a house, you want to tell your real estate agent what's going on with this house, because they're going to do the inspection. They're going to find this thing out. They're going to look at your title. It's in my best interest to fund you. I don't get paid unless you get terms that you like. Time's our most valuable asset. So tell me what you want. Tell me what's going on with the business. Be direct. There are no secrets. I think that's probably the biggest frustration of people in our shoes, is that there's a lot of tire kicking and nonsensical conversations when we can probably cut out 80% of that fat. Just get to the heart of the matter. This is what I'm looking for. Maybe this is what I have on the table. That's what a lot of clients do with me. They say, hey, Reuben, I've got this offer from this person. Here's the rate. Here's the term. Can you beat it? This is what I'm looking for. Great. Give me 10 minutes. I'll see if I can beat it. So I guess, yeah, be transparent with who you're working with, because they generally are, at least they're generally there to help you.
And what about you, Fernando?
Yeah, I agree with everything that was stated previously, and particularly, of course, working with the SBDC is very important. What I will add to that, and one of the things on why it's to work with somebody like the SBDC is understanding your financials. I think is something that is very underestimated in just in running a business in general. But on top of that, when it comes time to go and get lending, I see so many business owners that don't understand the numbers. They're good at doing something, which is what their particular business is, but they're not good at understanding the numbers behind that. And that's okay. You're not supposed to be a professional when it comes to finance. But if you're not going to take time to understand those numbers, make sure that you have a trusted advisor that can help you understand those numbers, help you understand cash flow, help you understand your margins. I see so many business owners that sacrifice margins for top line growth. And they really just think like, well, I need more customers. I just need more customers. I just need to do more business. And sometimes they don't understand how, some high price debt might compress their margins. Brianna mentioned earlier, maybe you don't really need financing. That's true in a lot of cases. If you just figure out how to work within the right margins and don't grow too quickly. I've had many clients that have grown themselves out of a business because all they're focused on is that top growth, generating more revenue, and they sacrifice their margins for that. And you can do that for a little while here and there, but down the long term, that will put you out of business, and you're going to realize, I'd rather do half the revenue for the same amount of profit than double the revenue. You know what I mean? Because ultimately, you're working twice as hard and you're taking home the amount of money. So have somebody, if it's an accountant, CPA, somebody that you're going to be able to work with closely to help you understand those numbers and why it doesn't make sense to scale at a particular time or take a specific contract.
Fantastic. All awesome tips. And here we are running at the end of the hour. And I want to thank each of you for being on the panel. Thanks, Brianna, for talking about SBDC and explaining everything that we do. And as they've talked about the tip of trust and being honest, just a reminder, everything that we do at the Small Business Development Center is held in confidence. We actually are legally required to keep it all in confidence as well. So I think that's a critical element. Again, I want to thank our sponsors, Home Street Bank, Main Street Launch, CDC Small Business Finance, and of course, the two panelists we got on here, Fernando from Primary Funding and Andrew from Marble Bridge. Reuben, thanks for getting on and all your great advice. And Pete, same with you. Thanks for all the great information that we have. Appreciate everybody. Have a fantastic weekend. We'll talk to you all soon.
Thank you, Dan.
Thank you very much, Daniel. Thanks, everyone.
Thanks, everybody.
Thank you, everyone.
Thanks, guys. Very helpful.